Credit cards explained for beginners. Credit cards can feel confusing, intimidating, or even dangerous, especially if you've heard horror stories about debt. But credit cards are not good or bad on their own. They are simply tools. Used correctly, they can help you build credit, handle emergencies, and protect your cash. Used incorrectly, they can trap you in debt, drain your income, and increase financial stress. In this video, we're going to break down credit cards from the ground up, in plain language. No jargon, no sales pitch, no pressure. By the end, you'll understand what credit cards actually are, how credit card companies make money, how interest really works, how to use credit cards safely, and how beginners should approach them. Let's start with the basics. A credit card is not free money. When you use a credit card, you are borrowing money from a bank or credit card company. They pay for the purchase on your behalf, and you agree to pay them back later. Every credit card comes with a credit limit. That's the maximum amount you're allowed to borrow. It also has a statement period, a due date, and usually interest. Think of a credit card as a short-term loan that resets every month. Your credit limit is simply the maximum amount you're allowed to borrow at one time. If your credit limit is $1,000, you can never owe more than $1,000 at once. If you spend $400, you're using 40% of your available credit. Here's an important beginner rule. Just because you can spend up to your limit doesn't mean you should. Using too much of your available credit can hurt your credit score and increase financial risk. Now let's talk about statement cycles and due dates. This is where most beginners get confused. Every credit card works in monthly cycles. You make purchases throughout the month. At the end of that cycle, the credit card company creates a statement. That statement shows how much you spent, your statement balance, your minimum payment, and your due date. You are not required to pay immediately after every purchase. You only need to pay by the due date listed on your statement. Now let's talk about the minimum payment. This is one of the biggest traps. The minimum payment is the smallest amount the credit card company allows you to pay. Paying the minimum keeps your account open and helps you avoid late fees, but it also causes interest to build up over time. Credit card companies make the most money when people only pay the minimum. Here's the beginner rule to remember. Minimum payments protect you short-term, but they cost you long-term. Now let's explain interest. Interest is the cost of borrowing money. Most credit cards charge a very high interest, often between 18 and 30% or more. Here's the key concept beginners need to understand. If you pay your full statement balance on time, you usually pay no interest at all. Interest only applies when you carry a balance past the due date, or when you pay only part of what you owe. That's why credit cards reward people who pay in full and punish people who don't. Credit cards also play a big role in your credit score. They affect your payment history. That means whether you pay on time. They affect credit utilization. That means how much of your limit you use. And they affect credit age. That means how long your accounts have existed. Beginner-friendly behavior is simple. Pay on time. Keep balances low. Don't open too many cards at once. You don't need to be perfect. You just need to be consistent. So how should beginners use credit cards safely? Here's a simple strategy. Use your credit card only for planned expenses. Treat it like a debit card with a delay. Never spend money you don't already have. and pay the full balance every month if possible. Good beginner purchases include groceries, gas, and small recurring bills. Try to avoid impulse purchases, emotional spending, and the mindset of, "I'll figure it out later." Now let's answer an important question. Should beginners get a credit card? A credit card is useful only if you're ready. You may be ready if you can track your spending, pay at least the statement balance most months, and understand that credit cards are borrowed money. If you're not ready, it's okay to wait. Credit cards are tools, not milestones. Before we finish, let's cover a few common mistakes. Using credit cards to survive every month, paying only the minimum for a long time, maxing out limits, ignoring statements, using credit to fund a lifestyle instead of a system. Credit cards should support your system, not replace it. Here's the final thought. Credit cards are not the enemy. Lack of understanding is. Used correctly, credit cards build trust with lenders, add protection to purchases, and provide flexibility, not freedom. You don't need to fear credit cards. You just need to respect how they work. If this explanation helped you, like this video, subscribe for more simple finance lessons, and share it with someone who's just getting started.